Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. We have a very special session today. Today we're going to talk about the year-end successes and the year-end failures that you might have had this year. We're going to take all of 2021 and wrap them up in a nice little bow. And this is going to be the top 23 trading lessons from you, actually. About 2 weeks ago, we put out a survey, basically a form asking you to type in what did you do well this year? What absolutely positively did not work this year? We actually compiled both of them into a list. So we're actually going to go down the list right now, and we're actually going to start out with what didn't work. Actually, that seemed to have a much bigger pain point than the other side. And just to give you an idea, probably from an answer perspective, there's probably about 50% more detailed answers on what did not work versus what absolutely did work. And what's kind of exciting about that is the stuff that did not work has nothing to do with the stock market, has nothing to do with when you bought. A lot of it has to do with when you sold. But more importantly, it has to do with it's 100% in your control. And we spend a lot of time talking about that if you want to elevate your trading in the fastest way, is you need to make a big list of what absolutely does not work. And that's a very common quote in Reminiscences of a Stock Operator by about Jesse Livermore, is that he made a big list of what didn't work, and then what was left over was actually his trading strategy. So we're going to head right over. We're going to dive right into it. We're going to come back and forth, but I really want to get into this because I want this to be about you. I want this to be a year-end thing that you could watch a few times, take notes. And then if you have any questions, this is actually the big thing, because we got a lot of answers from you. We compiled the majority of the ones that we could for this call. I want to ask you to do me a favor. When you watch this video and you see all the stuff that absolutely did not work, all of the stuff that did work, if you have follow-up questions, leave a comment in the description below the video, in the comment section below the video, and we'll have an ongoing dialogue over this weekend and going forward to see if there's anything that we can do to help you. All right. So we're actually going to go right over to the survey. I'm going to show you what the survey was first. So we ran an end-of-year survey, and we're going to focus on these top two questions right now. Let me actually bring that in just a little bit. So first, what absolutely did not work for you? Give detail, open the wound, feel the pain, pour the salt in it, a big list of what doesn't work. And then we're going to work our way down into what worked and resulted in the biggest improvement. This is actually one of the biggest parts here, is the biggest improvement. I can't stress strongly enough that feeling like you're succeeding versus actually making money, not the same thing. There's a very important thing that we've spoken about recently, is that you feel close, but you can't get to the other side. That's what's going to separate you from struggling Sally to happy Harry, getting to the other side where you're actually making money. You want to get to the point where you're paying attention to every single thing that you do in the markets and writing bullet points down, writing down observations, writing down the actions that you took, and then actually using what you learned on your very next trade. So I think what we're going to do now is we're going to first jump into what absolutely positively did not work. I'm going to give a little bit of commentary. We have 23 total that we're going to talk about. Yeah, 23 total that we're going to talk about today. And I just can't stress this strongly enough. We did this inside of the boot camp, and it turned into over 6 hours worth of conversations. And we actually had the transcript done and the audio and everything like that. I just want to strongly encourage you to watch this video more than once. And please, I'm asking you, please write comments below the video after you watch it a couple of times, and then come back and let me know what you learned from this video and how I can help you going forward. And I promise I'll get back to you. I just need you to write it after you watch the video in the comments below. All right, so let's jump right into it. We're going to get into, first, we're going to talk about what didn't work. Actually, I want to say hello. Hey, Winnie, good morning. John, good morning. How's it going? Hello, Roz. How are you? Good morning. Good morning. Raphael, good morning. How are you? Ted, Happy New Year. All right. Good morning, Marissa. All right. So we're going to actually go again. This was the big thing. Absolutely did not work. Now, I think that it's safe to say that Everybody right now in a heartbeat can put in there what absolutely doesn't work. But this is the thing. Do you actually stop doing it? That is what will separate you from somebody who sees their account go like this every single month versus somebody who sees their account go like this every month and they're dabbling and kind of trading on the side and not taking it seriously. You should want to put our money in harm's way when we feel like there's a really strong edge and learn how to avoid what doesn't work so that you instantly stay here and you see your account start to go like that. All right. All right. Just want to say hello. Helena. Good morning. Thank you so much. Lewis, good morning. Happy New Year. Oh, by the way, obviously I want to say Happy New Year to everybody. Not going to do a broadcast tomorrow on Saturday, obviously. So let's get right into it. I want to give everybody as much time as possible. Continue to ask questions in the live chat. And if you have any more questions, put them below. Okay. All right. So while the pandemic hit me, I want to get right into the parts that, again, absolutely did not work. All right. I did invest. Let me actually come up. I'll go on the screen over here. All right. The hard part is capital for investment. You need to have the opportunity to short the stock. At the same time, I only have $1,000 in my brokerage account. So I followed some people on YouTube. With a plan, I always had small profits and days with losses. I started following you and have mentally been changed even more. I go to operation more now. So I want to start out with something here because this is a mental roadblock. This is actually not a problem. So I want to talk about this right here. The hard part is capital for investment. Okay. And you need to have the opportunity to short sell the stock. So I'm going to give you some tough love right now. Okay. I got news for you. Your small account is not a problem, especially in this day and age where you can trade fractional shares. Where when I started trading, you couldn't even trade odd lots, and it was a lot more expensive if you could when that broker dealer did. So I'm going to tell you straight up right now, your account size is not a problem. That's a mental problem. You are making that a problem. You could trade 5 shares. You could trade 10 shares. It doesn't make a difference. Start with $1,000 as you have right here and try and turn it into $1,250. Try and turn $1,250 into $1,500. Get out of your head that garbage that you think that there's a limitation because of capital, because I'm going to tell you right now, everybody had a small account at some point and everybody had to work that account. The second part is you need to have the opportunity to short stock. Number one, you don't. I'm just going to tell you that. So get that garbage out of your head. You don't need to have the opportunity to short stock, especially with a $1,000 account. Why in the world would you put a $1,000 account at risk with unlimited risk on a short sale with $1,000? So number one, I don't think that's a smart idea at all to be looking to short sell stocks with only $1,000 in your account. Number two, to think that you need to have the opportunity to short sell stocks with $1,000 in your account, and even if you had $1 million in your account, is absolutely garbage. Absolutely garbage. Some of the biggest multi-7-figure traders that I'm friends with don't short sell stocks. As a matter of fact, if you look at the big blue line of the market over the last 25, 30 years, most of it's been to the upside. We have this screaming move to the upside. Why in the world do you feel like what absolutely positively did not work this year was the fact that you could not short sell stock with $1,000 in your account? Whoever wrote that, get that garbage out of your head. That's a mental issue. That has nothing to do with going on in the market. So what absolutely did not work for you this year is that you're making excuses. Get those excuses out of your head and start focusing on the resources that you do have, and then you'll start making money. So it has nothing to do with the market. So what absolutely did not work for you, open the wound, pour salt in it. You got to turn upside down what you believe is opportunity. The market had an amazing year this year. We are right near all-time highs again yesterday. The problem you have is here, has nothing to do with the market. Let's go to the next one. All right. Patterns and indicators. I believe this was from John. No matter which one I attempted to use, I would always see it too late. They're only good one if you can see them while they're forming. To see them in the past is the same thing most gurus teach. If I could trade in the past, I could make a fortune. Okay, so let's actually get into this. So I'm going to actually put this up on the screen. Maybe I can even make it a little bit bigger. I'm not sure if you can see it. Let me go on the side. That might help a little bit more. There you go. All right. So patterns and indicators. No matter which one I attempted to use, I would always see it too late. So let's get into this now. All right. They're only good if you can see them while they are forming. To see them in the past is the same thing as most gurus teach. Okay, so first let's jump into that. All right. Patterns and indicators are only as good as your understanding of how to use them. Okay. There's literally thousands and thousands of patterns. Just go to eSignal or TradingView or any charting platform you have. There's thousands of them. The problem for most struggling chart readers, and I'm going to assume this person's a chart reader and not trading at this point or struggling as a trader, is that you believe patterns and indicators are trading. They're not. Patterns and indicators are giving you an idea of order flow and tape reading. So to say that you're only seeing them in the past means that you are a chart reader and not a trader. And I'm going to tell you why that absolutely positively didn't work for you this year, because you're only looking at the first part of the equation. How many times this year have you heard me say, if this happens, then this happens. If this happens, if this, then this. If this, then this. The person who typed this in, patterns and indicators, to see them in the past is the same thing as most gurus teach. I got news for you. You're only chart reading. I'm telling you straight up, this is tough love Pete today. If you really want to see some kind of change in your trading, stop blaming other people. You want to know what absolutely doesn't work? Putting the responsibility for your success on somebody else's shoulders. You're watching this right now, get fired up about making change, but don't you dare say that it's a guru's fault that you aren't further along. Patterns and chart indicators, that's a problem. That means that you're only looking at the very first part of the trade and not anticipating what's going to happen next based on what you're looking at. So if patterns and indicators absolutely did not work, it's because right now you're a chart reader and you want to aspire to answer those second questions, which is if this happens in a pattern and indicator, then what should happen next? And what does that mean I should do? Get out of your head. And I'm telling you where this is coming from. I'm going to bring this up one more time. This is coming from somebody that thinks that every trade should work. I'm telling you for a fact, because I had my trading floor in New York City. I've been trading for 21 years. Somebody who is blaming patterns and chart reading believes in their heart of hearts that every time they see a bull flag, it's supposed to work. Every time they see a breakout, it's supposed to work. I got news for you. That's horse malarkey. I don't want to curse. If you believe patterns and indicators are trading, you are 100% wrong. It's not. It's chart reading. And that's why it absolutely positively did not work. So that's number one. Number two, stop blaming other people. Stop blaming gurus for your lack of success. Ultimately, it comes down to the fact that you need to pay attention to what's working and what's not working. So if patterns and indicators are not working for you, then you need to make a change. You need to ask yourself why. And I'm telling you why without even having ever met you. You are not asking the second question, which is very simple. If this pattern or indicator is telling me this, then what's most likely going to happen next? And what should I definitely do based on the previous two questions? That's why it's a problem for you. Let's go to the next one. All right. All right, too large of a position and using mental stops. I think that this is something that we've spent quite a bit of time on. I will absolutely tell you in the questions that we got in the boot camp, that has been the single biggest issue that we have seen, which is people sitting in positions and they melt against you and they melt against you and they melt against you and you don't get out. If you watch the video that we published yesterday, the 7 keys to swing trading success, one of the top keys is you need to accept the dollar amount risk prior to putting on the trade, because if it goes against you, you have already admitted, I'm okay with taking that trade and getting out of town because I'm okay with that much risk in exchange for what you think you can make. If a trade moves against you and it keeps going against you and you, God forbid, you average into a losing position and you don't get out, that means one of two things. And the second reason is probably stronger than the first reason. The first reason is that you did not accept the loss, the potential of a loss. So let's talk about what an edge means. An edge means it works most of the time. Not every time, most of the time. Everybody only sees it should work, but what they don't admit is that other part of most of the time means sometimes it's not going to work. So that means that you only saw one side of the trade, it moved against you, and you were not prepared to make a decision. Number two, if a trade moves against you and you don't get out, and let's say you accepted the dollar amount, but you still don't get out, which is kind of a fib because if you accepted it, you would have gotten out, is your ego. Stop trying to be right. Every single professional trader, including myself, we put a trade on and we manage it. We put a trade on and we manage it. We don't obsess over whether or not it was everything lined up and oh my gosh, why didn't that make money? And if I get out of it, then it's going to do exactly what I thought, which we're going to address that right now. Okay, right here. All right. Then 5 minutes later, I would see a reversal candle and the trade would skyrocket and then get frustrated and would cloud my judgment for the remainder of the trading day. Stop. That's here. Okay. I got news for you. Everybody has adversity and everybody has losing trades. I'm telling you right now, if you get out of a trade, it doesn't work out. Let me ask you a question. 5 minutes later, it rockets back in your favor. What's stopping you from getting back in? Is there like somebody with ropes on your hands and you can't put another trade on? If you're sitting at your seat and you just got out of an idea that you absolutely love because you put the first trade on in the first place, you get stopped out of the thing. 5 minutes later, it's rocketing back in your favor. Get back in. What's stopping you? You need to make it a habit, especially it sounds like this person's day trading. If you are day trading and you're sitting at your seat and you did all of the work you're supposed to do, and you absolutely, I love this idea, and you get stopped out, stop crying. Put an alert on to get back in or put a buy stop in to get back in. Get right back into the trade. That's professional trading. Stop trading and thinking like an amateur. Stop trying to be right. Respect your risk. If you get stopped out, make a plan to get back in if the idea is still valid. Don't whine. You want to raise your game? You want to take money from the wealthiest people on Wall Street? Start acting like somebody who belongs at the table. Stop blaming other people. Stop blaming indicators. And stop blaming the stop loss that you believe stopped you from getting into the next trade. That's BS. It's on you. If you're sitting at your seat and you get stopped out, good. Put the trade back on if you still like it. An advanced thing is immediately set an alert. If it gets back up there, you'll get back in if you happen to be looking at a different stock, or put a buy stop in there for 100 shares. If it gets back up there, then you evaluate whether you want to put the full position back on. Stop making excuses, especially if you're sitting at your seat and you're frustrated. What's frustrating you? Come on. Come on. All right. All right. Overall year was a total loss. Purchased and sold $425,000 in stocks and options. Lost the beginning of the year, doubled my account in 2020, back to square one in 2021. So this person needs to really think about what happened, what went wrong. Reason for the loss is letting options expire near or worthless while selling the winners too soon. So let's think about this one right here. Letting options expire worthless means that you did not have a plan for managing the position prior to the trade, because as the option unfolds, the biggest problem with options, or the biggest downside, I shouldn't say problem, the biggest downside with options is you need to have a plan for time decay. Options, unless you're buying deep in the money options, do not move dollar for dollar with the way the underlying equity is. So you need planning. That was actually a big part of what we did earlier in the year, a couple of weeks ago with the bootcamp community. When we had that 6-hour coaching call, it turned into the number one problem and the number one thing planned for next year is being prepared, doing the game planning, understanding how to script out your ideas. So this person was allowing options to expire without a plan for what to do as they moved against them. The number two one was, I won't pull it up again, while selling the winners too soon. I'm not able to sit and watch the market as I would like in my commitments to other matters. I need to learn how to enter stop loss, profit targets, and OCO orders. So the good thing is this is 100% in this person's control, right? But I want to touch on this. I am not able to sit and watch the market as I would like, given my commitment. So both of these things, okay, both of them. Number one is learning to hold winners longer. That's just a matter of having a strategy. So again, you're here with me. If you happen to be watching the video later at 7:30 in the morning, if you are here right now, you have the desire to fix this, okay? I happen to know who this person is, so I'm talking to you very specifically, JB. Take your time on your spare time and ask yourself, what am I missing about profitable trades? How can I structure? What is the minimum criteria for me getting out of a winning trade? Should I scale out? Should I hold the whole thing? How do I know the difference? Should I get out into momentum, support, or resistance? But what if you're off the charts and you're literally like right up here and you're in all-time highs? How do you manage it at that point? Spend an hour to write that out so that when it happens, you will, like number 3, it's situation number 3. I know how to manage this profitable trade. That's in your control. So what absolutely did not work for this person is you need to write down what you plan to do prior to the trade, which we call in our community scripting it out. Massive, massive difference. And I don't say anything that I wouldn't want repeated, especially because we're here on a video on a public forum. I will tell you this, trading is a heck of a lot easier when you script it. Scripting out means that if this happens, then I plan to do this. If this happens, then I plan to do this. Most people only do the first part. If a stock is strong, I plan to buy it. But then they have no plan at all for what happens if it moves in their favor or against them. And you take that even further, stacking the order flow, where you then have expectations of what kind of position size you should have. And number 2, how long you should hold that trade. Should you exit into momentum? Remember, we talk a lot about a push and a pause, right? And that next move. Should you be push up and pause and get out? Push up and pause and I want to add. You need to know the difference between those situations, and it becomes 100 times easier when you map that out prior to the trade. Trading is infinitely easier when you know what you're going to do prior to doing it, prior to needing to do it, but then you actually have to do it. I'm telling you, I see a lot of people on this call right now who I know came in the boot camp or are in the boot camp at one point telling me that the reason they signed up for the boot camp is because they were holding their losing trades too long. And number 2, they didn't know how to make more on those winners. The good thing is both of those are in your control. You just need to script it out. All right, let's go to the next one. Let's see. My biggest issue is I'm trading at 100% perfect. My problem is I am wrong. If I wait till the last hour, I have a better feel if my plan was right to make decisions in the last hour and hold overnight. Also revenge trade. So there's a lot to unpack here. Okay. Get this out of your head. Wrong should not be in your trading language. Okay. And you also don't want to do anything from feel. Wrong and feel. Get those out of your head. Then make a decision in the last hour and hold overnight. Well, is that scripted out? Is that planned out? And revenge trading, that is absolutely an advanced trading language, which means that you believe that a stock owes you money and you got to go back and trade bigger to get it back. Here's the biggest thing I want to take out of this, okay? You could be 100% right as far as analyzing the tape, analyzing the order flow, 100% right on your analysis, but still not make money on a trade. You could have the absolute perfect setup, perfect breakout, big volume, everything is looking great. Buy the breakout and the stock comes back. That doesn't mean you were wrong. It means buyers didn't step up at that moment that you bought the stock. You have any idea how many losing trades professional traders put on? A lot, a lot. But we don't care about whether or not a trade, individual trade after trade after trade works out. It's not the individual trades that matter to your success. It's the trades over time. It's every trading decision you make. The way I'll put on a trade, I'll manage it. I'll put on a trade, I'll manage it. I'll put on a trade, I'll manage it. I don't have an emotional attachment to whether or not the trade made money. I never, ever, and you want to write this down because this is after years of learning how to do this. You never say that trade was good or bad. You never say that trade was right or wrong. You say, I got follow through or it didn't follow through. Because if you did what you were supposed to and it follows through, great, we got follow through. Now, what is the next decision? If you did what you were supposed to and it doesn't follow through, you're like, all right, it didn't follow through. I did. You are now putting all the responsibility on yourself. You're also taking off the responsibility of you believe the fact that you need to be right and you need to believe that every trade should work out. And I'm going to prove this to you right now in an instant. How many times have you put on 2 trades in a row where the first one, push up, bull flag, everything looks awesome. You buy that stock and it melts lower and you're like, bull flags don't work. Then the next one, you get a push up and a pause. You don't take it because the last one didn't work. And that one rockets for the next 4 days and you're sitting there pissed off because you didn't take it. That is proof that every single idea that we have absolutely no idea which of those trades are absolutely going to follow through. But as active traders in charge of the outcome, in charge of the way we do things, you have a responsibility to take all of them and wait for follow through or manage the downside. So I can't get this enough out of me right now. Stop saying right or wrong. You're going to drive yourself bananas. All right. All right. Big losses when trying to pick tops and bottoms on swings, then wasted months on dozens of indicators and more months off scans and screeners. So I just want to talk about this in a little bit of a quicker manner here. And it actually comes down to this. Okay. Wasted months and months off scans, screeners, and indicators. Okay. 90% of the professional traders that I know, if not 98% of the professional traders I know, trade off of exactly the way my screen looks. Candlestick charts, multiple time frames, maybe one or two simple moving averages, and volume. Now, am I saying that's the only way to trade? No, of course not. There's thousands of ways to trade. However, maybe success leaves clues if I tell you that's how most professional traders. So wasting months on dozens of indicators, more months trading off of scans and screeners. So I'm going to solve this person's problem in 1 minute, okay? Do your game planning before the market opens. Know exactly what your edge is. And again, the way that we talk about it is edge, scan, script, okay? What this person's doing is they're going straight to scanning and screening and then pulling up those ideas without any depth to the quality of the idea. So you need to only scan for ideas that match your edge. Then when the market opens, shut the scanners off. Shut the scanners off, shut the screeners off, and just look at those stocks that you plan to trade. And I'm telling you right now, if you have 5 stocks, here's what's going to end up happening. 5 stocks, 4 of them are going to do nothing that you planned. I'm telling you right, maybe 3 out of 5 do nothing what you wanted them to go up, they go straight down. And you, as a new trader learning how to do this, you can be like, hey, Pete, you told me to game plan 5 stocks, and 3 of those stocks didn't do anything that I expected. What do you think I'm going to tell you? Holy mackerel, 2 stocks did exactly what you wanted? I hope you made money. That's in your control. Get out of your head the follow-through that you don't want and focus on the follow-through that you do want. If trades follow through, you should have a script for managing them. If trades don't follow through, you should have a script for what you plan to do. In this case, it's very easy. Number 1, stop taking big losses. Stop. Get that. Take a loss, admit when a trade's not working, and go to the next trade. The way that we talk about it in the boot camp, make that money back. Where can I make that money back on the next trade? That should be the first thing that goes through your head. Next, number 2, game plan prior to the market opening. Shut off your scans, shut off all that other garbage, and just sit there and say, all I'm going to do today is trade the stocks on this piece of paper because I just spent 14 hours figuring out what I believe is the best ideas versus something goes to a 5-minute breakout as a day trade. You're like, oh, I have no idea what that stock is, but it just made a new 5-minute high. Stop that garbage. Game plan it. Scan from your edge, game plan it, and shut your alerts off. I don't want to say guarantee. I have a lot of confidence that you will immediately feel much better about your trading. Okay. Now, I want to touch on one thing. I can hear everybody right now, but that means I'm going to limit my opportunities. No, it doesn't. It means that you're prepared to make money. That's what it means. Think about that. All right. All right. I want to go down to the next one. My biggest losing trade was Square and PayPal on earnings. Earnings are a very tough play. It's a whole different animal than just trading off of charts. I keep averaging out the options when I get hammered, when the stock price was falling down. Okay, that's not good averaging. Hoping for a rebound or reversal. Hoping is also not good. Averaging, hoping, getting hammered. Kept falling down. I gave up and sold all the options to cut the loss as soon as I was out. Both stocks recovered and the option value, $20,000 vanished in a matter of days. I am a bag holder. So what is the problem for this person? The problem for this person is they're also trying to be right, and they're also not getting back in if they validate the trade. Now, I have zero idea how big of an account that this person has, but if you just lost $20,000 in a couple of days, I can't say if you're trading too big. However, $20,000 in 2 days, it might be peanuts for you. I have no idea. I'm not going to even focus on the dollar amount. What I am going to focus on, you traded earnings, you kept averaging down, the stock got hammered, hoping for reversal, never happened, got out, and then it reversed. All of that is in your control. Going back to what we talked about before, the other person was letting their options expire worthless. You have to get to the point where you know what you're going to do before it happens. If you are loaded up on options into earnings, you have to know that that's a riskier play. First, the options premiums are most likely going to be inflated prior to the earnings come out, because look, smart option traders know that's what happens. That as you can actually get the implied move off of the earnings based on the premiums. Super advanced. We're not going to get into that, but the topic that we're going to talk about right now, based on this person, why does everybody feel like you get stopped out and you can't get back in? Why? I'm going to give you a little bit of advanced trading suggestion right now. Having a plan, it's not all or nothing. If it's moving against you faster than you expected, especially if you have options within a time frame, scale back some of it. Take some of the risk off. You can always put it back on. It fascinates me when I see so many people saying I got stopped out and watched it go without me. Why the hell didn't you get back in? What is stopping you from getting back in? I'm getting all fired up right now because these are in your control. Do you not understand that? Stop blaming the market. Stop blaming the stop loss. Stop blaming earnings. Stop. That's on you. If you are taking this seriously and you want to think and act and get the results that professional traders get, you have to start taking responsibility for your part, which is which stocks you're trading, which options you're trading, and how you plan to manage the downside first, and then what is your plan for when they move in your favor. That is all on you. Stop freezing up, stop trying to be right, and start acting like a pro. That's the whole point of what we're getting across here, all right? All right, I wanted to try day trading. I work a full-time job, which makes it nearly impossible to trade during 8:30 to 3 p.m. market hours. Okay, so let's just start that one first. I wanted to try day trading. Before you even try day trading, you need to have a strategy. And again, I talk about this all the time. Day trading versus swing trading is like professional baseball versus drunk softball on the weekends. They look exactly the same, but they are completely different. Day trading is so much faster than swing trading. You need to have decision-making ability like that, which is not that hard if you have a strategy. And look, if you want my strategy, you can learn about the bootcamp. If you want to learn more about it, you can get the link below the video. All right. So here's the biggest part. So I tried day trading after hours. What I learned was in after hours trading, the volume is much less than during the day. It's like watching paint dry, very slow movement. So here's what I want to talk about with pre-market trading and after hours trading. Okay. So this person is saying that did not work for them. Okay. I get it. You know why? Pre-market trading is a whole different animal, different liquidity, which he talks about here. I'm not sure if it's a man or a woman, but they talk about it. Volume is much less. So what does that mean? What does that mean from a risk perspective that volume is much less? And again, you could read every trading book on the planet. This one is a good one. I mentioned this one a while back, Larry Hite. Every single one, every trader who has made a small fortune, the number one thing they talk about is risk. If you've never day traded before, which that in itself takes a while to learn, and then choose to go into pre-market or after hours trading where there's significantly less liquidity, you're going to have a very, very hard time understanding what's going on. And you're going to have a very hard time getting in and out where you want to because there's less liquidity. So one of the first things that we teach in the bootcamp is we go for average volume per day is 2 million shares, average true range of $1.50. There's a delicate balance between volatility, which we measure by average true range, and liquidity, which we measure by average volume. Can you trade stocks that have a little bit less average volume? Sure, but how much experience do you have? You want to be able to get in or out pretty much exactly where you want to, and that it's very, very difficult to do pre-market or after hours. If even during the day you're trading stocks that have a little bit less liquidity than that, you can still do it. You just need to go into the trade understanding. So I have not met most of you here personally. I will tell you this. If you've never day traded before, I cannot express strongly enough, deciding to jump into trading after hours of pre-market trading is a bad decision. It is a bad decision if you've never traded before. Stick to it. Now, I want to touch on the other part of the comment here, which is kind of was not mentioned, but if you can't be at your screen during day trading hours, swing trade. It's not a handicap. Getting back to what we talked about before with the person who only had $1,000 in their account and they were blaming the fact that they couldn't sell shorts, start with the resources that you have right now And if you make enough money on the swing trading side of things and you want to make that decision to jump into full-time day trading, do it after you've done it. But I will tell you this, jumping into full-time professional trading, you got to know your stuff. You got to get either a professional education, you got to get a track record, so prove to yourself that you could make money. And when I say professional trading education, I'm talking about an edge that works, that you prove it works and proves you can follow it. Okay. So start where you are. That's the big thing. But jumping into pre-market trading, I can understand why that was challenging. All right. Another big mistake was I placed too big of a share size and almost never dollar cost average into a trade. My poor stock trades are based on some recent market news that just came out on a stock I had never heard of, and usually just one day wonder stocks. Stock trading is very emotional when it is your hard-earned money. Paper trading does not hold a candle. This is 100% true. Absolutely, positively true. Paper trading does not hold a candle. I'm adamant that you will never learn how to trade paper trading. There's not even a question. But here's the thing I want to get across here, okay? Too big, some recent market news that I never heard of. 3 big blunders. But why is trading emotional? Now, I want to be very clear about this. Always respecting the fact that money's on the line, right? Always respect. Of course, trading is emotional. However, if you are risking the right amount of money relative to your emotional strength for how you can either prove you could make money or the size of your trading account, trading, look, losing trades stink, winning trades are fun, but at the highest levels of trading, you can reduce all of that emotional stress by trading the right dollar amount per trade. That's just a fact. You shouldn't be risking massive amounts of money. You should be risking portions of your account to allow for your edge to play itself out. So factoring in some losing trades, factoring in learning how to manage the winners, and then you get to the other side where your account starts to grow slowly if you put all those pieces together. So I'm not saying you're going to eliminate stress completely, but you will dramatically reduce it, the emotional aspect of trading, when you're reducing your position size relative to your track record and relative to your account size and relative to your experience level. It would blow your mind when you hear some stories like I did when I was, I had my office in New York City and I was trading in New York as well, how some people were trading 100% of their capital on individual trades. It was just crazy. Absolutely crazy. That's not trading, that's gambling. You want to act like a professional. And all of these things we're talking about today, you learn to eliminate these things that don't work. You instantly get closer to the other side of success because now you are not frustrated. You're not digging out of a hole. You're not trying to figure out what doesn't work. You already know what doesn't work. You have proof from your own profit and loss statements what doesn't work. The question is, can you stop doing it? Can you write down, my gosh, that was such a dumb mistake. I'll never do that again. Picking tops and bottoms. Another one he wrote here was, I trade too big. Trading too big is a big problem too. That's also ego. You're focused on how much you could make instead of learning how to trade first and then scaling your trading after you develop a track record and you prove your edge works and prove you can follow it. All right. Okay. I watched too many YouTubers pump up stocks and would buy their suggestions only to see them fail after time. Not setting reasonable stop loss on my trades in hopes of stock would turn around was part of my trading mistakes. If a stock was so easy, no one would be working a real job. So let's actually dissect that a little bit. Watch too many YouTubers pump up stocks and would buy their suggestions only to see them fail after time. Well, I happen to be on YouTube and I'm very careful about everything that we talk about here, which is I'm always talking about what's going to happen next. Very, very rarely do you hear me talk about what happened in armchair quarterbacking, but let's actually put this into context. Every idea that you take, whether it's somebody on YouTube, whether it's somebody on Twitter, whether it's Jim Cramer, every single person trading, everything about trading is about an edge and probability over time. That's a fact. It is an absolute fact that you need to understand how to manage and expect trades that don't work and how to manage and expect trades that do work. So if you are taking all of the responsibility off of yourself and putting it on somebody on YouTube, that's not good trading, because what if YouTube goes away? The number one thing that I have as my mission is to teach you how to be the asset, to teach you to be the reason that you actually make money. If you are constantly relying on somebody else to give you the trades that you believe that are going to turn your life around, what if they decide not to do what they're doing anymore? What if they just decide, I don't want to do that anymore? Every single trade you place should be an education that you have personally so that you become the reason that you're making money. I love doing these videos. I love inspiring everybody. I love walking through strategy and tactics and all that kind of stuff, but not setting reasonable stop losses in hopes the stock comes around. That's on you. That's not on the YouTuber. That's on you. All right. If stock trading was so easy, no one would be working a real job. I got news for you. Stock trading is hard work. I got news for you. News flash. You want to make $1 million? Work your ass off. Learn from mistakes. Figure out what works. Turn 2,000 into 3,000. 3,000 into 5,000. Don't think you're going to turn 2,000 into $1 million in a month. That's ridiculous. So if stock trading was so easy, no one would work a real job. Who said it was easy? Honestly, who said it was easy? The process of finding good ideas should be easy if you have a strategy. The actual process of managing yourself and managing the trades, that's where skill happens, which is why I believe that being in a community where you're constantly looking over different types of ideas, that's the fastest way to accelerate it. So nobody said stock trading was easy. Yep, it's a skill. That's like saying, I want to do a little surgery. Is that okay? I watched YouTube yesterday. It doesn't work that way. All right. This is a big one here too. Forgetting if I am an investor versus a trader. This is a big one because that's position sizing and objectives. The biggest difference that I could word trader versus investor, and it's going to sound a little bit strange, but investors are buying in the future cash flows of the company based on the price now. You're probably going to let the stock fluctuate a little bit because you're buying the future cash flows. Traders are more looking for the next move, and managing risk reward within that next move. Could be the next move could be an hour, or the next move could be 3 weeks. But traders have an objective within that window. So it's very important. The opposite of that is when a trader puts on a trade, does not take the loss and turns it into an investment. We all know that's bad. And I'm sure we've all done that at least once or twice. All right. My time management was awful. I do my research at 2 a.m. and not follow up in the morning, get up after the market opens, want to trade without putting any work into it or having a plan for how I plan to trade, not clearly understanding the entry, the exit, the position size, the stop loss, not spending enough time on strategy, not scripting out what, when, why, staying in losing trades, avoiding day trade violations, setting trades after hours so I can get out without day trading violations. So obviously everything this person's talking about is within their control. When you game plan, when you trade, first, never trade if you're not prepared. That just goes without saying, all right? Number two is you have all of these other things. I don't know who this person is, but you listed everything that goes into scripting out. You just have to do it and then trade when you're available. If you happen to be busy at work for 3 days in a row and you can't game plan and you're working full time and you're swing trading on the side, that's perfectly okay. Probably millions and millions and millions of people trade that way, have full-time jobs and are trading on the side. There's nothing wrong with that. But you have to script out a game plan for when you're available to place those orders. The last part about this, and for some reason this comes out more often than I would ever expect, getting out of trades without violating day trading rules. That just means that you don't have $25,000 in your account. Stop seeing that as a limitation. What you need to do is create a trading game plan that works with your current resources. Do not make trading decisions based on the pattern day trading rule and holding trades, especially losing trades, simply because you want to be able to trade actively again the next day. Manage the trade based on how it's unfolding, not the pattern day trading rule. That's just quite honestly silly. And the second part of it is getting to the point where if that's a problem, you need to create a trading plan for the amount of money and time you have to allow the trades to play themselves out and get out of your head that you feel like there's a liability that you need to get out of the trade quicker because of pattern day trading. So to bring that all together, what absolutely didn't work is you are making up excuses instead of focusing on the resources that you have to grow your account. The pattern day trading rule should not even be a part of that. You should just be swing trading until it's not an issue. That's how to solve that pretty quickly. Okay. Let's see. Ross has a question here. If a person only had 1 to 2 hours a day to trade, which time during the day would be the most profitable? Absolutely the first 2 hours of the day. If you're available to trade, not even a question. If that was when you were definitely available, the first 2 hours a day. I know a lot of professional traders that only traded the first 2 hours of the day. Okay. Let's see. From the beginning of the year until mid-November, I made 20% of my swing trading. It was easy. Pick stocks that are performing strongly over the last 3 months. Then I spent the next month losing it all as market reversed direction. I closed them only to see go back up. So again, we have the same person. I close trades only to see them get back up. What the hell is stopping you from getting back in? First of all, okay? Found myself risking more money trying to get back to my previous highs. All right. So first of all, we've now seen repeatedly, I got out of a trade that went back in my favor. What's stopping you from getting back in? Seriously, what's stopping you from getting, go in the bathroom, look in the mirror and asking yourself, what stopped you? I'll tell you what stopped. You were aggravated that you had to get out. Put that emotion aside and stop whining. Start acting like a pro and have a plan that if you love the idea, what would make me get back in, and then get back in. It's that simple. This is your responsibility. This is it's in your control. That's really the more important part. So I hope I'm waking some people up. I hope I'm angering some people today, because I'm going to tell you, you want to trade at the highest levels. You want to see your account go like this. You want to have all that freedom that comes with extra money. Start taking responsibility for the outcome. And that means you need to start having a plan for what you plan to do. If this happens, then this is probably going to happen next. And this is what I'm definitely going to do. The other part that I want to get across here was, and I'll bring this back up on the screen here for a second, is right here. Then spent the next month as the market reversed direction. Okay. I want to talk about this for a second, because if you're a regular subscriber to our channel, which I hope you are, if you're not, smash that like button and hit the subscribe button. The amount of time that we spend on talking about the market is obvious versus it's not, and how that reflects trading activity and position size and profit taking, that dominates 90% of what we talk about in the boot camp. You can ask anybody who's on this call right now, who's in the boot camp, maybe they'll chime in. I don't know. Most of December, as a matter of fact, most of December and part of November, we spent the better part of that talking about the market's not obvious. We have to take what's available, reduce your position size, and on the trades that are getting good volume and follow through, we'll look to add to those. My swing trading activity, my day trading activity reduced dramatically over the last 5 weeks. Ask anybody who's in the boot camp or the Order Flow Pro with us. The second part of that is you need to understand how to spot that. How do you spot when the market changes, and how do you react? How do you adjust your plan when the market changes? Well, I just told you how a professional trader does it. You can't go back in and revenge trade and try and take out of the market what's not there. If it's hard to find, it's not there. You should not go in there and try and size up to make back the losses because the market changed and you're losing money, or you got stopped out and the stock moved back in the direction. Revenge trading is the most expensive thing you will ever do, because in your mind, you feel like the market owes you. The market doesn't owe you anything. The market doesn't owe me anything. You know what you owe yourself? The ability to read the tape in the order flow and then trade accordingly to what's unfolding. The point that I want to get across here is not the revenge trading. This is why we talk about order flow all the time. This is why we talk about tape. It's the number one things to do. Order flow and tape reading are telling you if it's obvious and how to know if it's changing. This person doesn't have a framework for understanding if it's obvious versus if it changes. They only see they want to be a buyer without recognizing the current conditions. And if you remember, we went over a chart of the SPY. I'm just going to pull this up really quickly just to bring this up to here. When we talked about the SPY and we talked about reading the tape, we talked about how amazing this 5 weeks was here. And then we went into 2 weeks of indecision, selling, buying, and back again. The last 2 weeks in November and for the majority of December have been anything but obvious. But you as a trader need to know, how do I spot that? Going back to the question from before, indicators and patterns hurt me. Indicators and patterns don't hurt you. You don't know how to use them. That's the problem for somebody who doesn't recognize when the conditions change. So you need to spend some time over this weekend. Today's New Year's Eve. Spend some time over the weekend and say, what am I missing? How do I spot in the time frame that I'm trading if it's obvious or if it's changing? That should be your number one priority. All right. Couple of things that I failed at repeatedly. One, it seems I find very good entry points in a stock and then nothing happens or the stocks begin to slide. So I write it down, waiting for the reversal to only never come. So the bottom line here is what? You have to plan what happens if it doesn't work in your favor. If it doesn't work in your favor, you simply get out. I get out of the trade in the SOB. 3 weeks later, it rips. Okay? How many times have we already talked about this? People, I got out of a trade and then it ripped without me. Where were you? In a closet? Get back in. Have a plan. If you did all the work, you said, I am so confident in this position, I'm going to buy this stock, and the trade doesn't work out, put a trade back on. If that entry maybe wasn't validated for that moment in time, that does not invalidate your idea in the first place, assuming it was a good idea. So this is a big theme. I hope everybody's getting this across, because I'm sure some people have the same problem. If you get, first of all, take the loss. If you said, I'm going to get out, and then have a plan for where you're going to get back in. I know there's 2 people on this call right now that are holding losing trades. I know for a fact, because they've told me. Shame on you. Hopefully you're learning. Professional traders do not milk losing positions. Professional traders milk winning positions. And that's also another quote from Reminiscences of a Stock Operator. All right. So now, thanks to Stocks for Breakfast, I'm in a trade in a different period with much smaller size. So this is good. So you're actually getting to the point now where you are managing positions. All right. That's awesome. So obviously we're running a little bit long here. I'm going to give you, I want to run through quickly the stuff that did work, and then we're going to kind of call it end of year meeting. And I just want to put this up here from Kelly. Kelly, I really want you to know how much I appreciate you're in the boot camp with us. All right. So I'm going to go over to the other one, and we're going to talk about what absolutely did work. Okay. All right. Getting better at reading the tape and see what is actually happening. So again, we just talked about that being a big problem for somebody. Is they don't know how to read the tape. They don't have a system in place for understanding when the market changes and using that information. And how about that is a big thing. Having, I just want to come up here again. Somebody before talked about chart patterns and indicators don't work. It's not the chart patterns and indicators. This first person that we have in here is saying having the information and using it. It's that second part that somebody who's frustrated with chart patterns and indicators, they're not using it. And they're expecting those patterns to be predictive. They're not. They are telling you what is most likely going to happen, and then you need to script for both sides of the outcome. Okay? All right, to determine what I'm looking for to happen next. So remember, this is what's most proud of and what worked in the biggest improvement. Knowing what I'm going to do if it does or doesn't happen. I'm telling you right now, take a screenshot of this. This person gets it. This person is somebody who is improving. Take a snapshot of that, because that is gold right there. Next, smaller position size, price action trading, seeing buyers step up and recognizing how long to stay in a trade. So again, we're talking about what absolutely did work. And for me personally, what are you most proud of? Smaller size allows you to learn and allows you to get feedback. And I want to talk about that for a second. A lot of people think that trading smaller share size means you're going to make less. No. Trading smaller share size could be just relative to your experience level, but just as important. Let's put smaller share size in context. And this is professional trading. Again, professional traders put pieces on and look for feedback from the market before they size up. Now, there's certain situations and conditions sometimes when you should have bigger share size, but for the most part, when you're trading back and forth, doesn't matter if it's a day trade or a swing trade, you put a piece on, you get feedback. You put a piece on, you're getting feedback. Sometimes that feedback is the entry didn't follow through. Sometimes the feedback you get is, yeah, here we go. And then you add to that shares. So this person is initiating smaller position size, getting to the point where they're now waiting for buyers to step up before they get it. We call that building an argument. All right. So right here, seeing buyers step up and recognizing how long to stay in a trade. Next, what did work? Education and learning. And I want to take a moment on that. Look, obviously, I'd love to see you in our boot camp and invest in yourself from an education and learning perspective, but I want to take that a step further if you don't do that. Every single trading decision you make should be a learning experience. Every single day, at the end of the day, you should be saying what absolutely worked today. Did I trade flawlessly? What did work, and how can I scale what did work? That last part's a big one. You don't need 1,000 strategies. You need something that you could get good at. I was trying to think of the right word. Get good at, and then scale. Before you start to trade this strategy and that strategy and this strategy, be good at one first. Prove that one works and prove that you can follow it. Trade that one bigger when the conditions warrant it, and then maybe go off to a different one. All right. All right. What worked for me very well was staying focused on my edge. For me, the edge is trading directional options on the 4 main indices. That's awesome. I also buy and sell stocks that are showing me order flow on my active list. This list is limited to 6 stocks. Again, let's talk about that. A lot of people, oh, I can't trade less stocks. That's limiting to me. No, it's not. If you're trading active liquid stocks, they don't wear out. The only thing that could happen on the downside is they become less volatile. And that's when you take that out of your list and you put another one. But this person's trading 4 main indices. They're trading the major ETFs. There's always liquidity there. So let's keep going there. What absolutely did work, limited to 6 stocks. My choosing for his list to be limited to 6 stocks that are primed for the next push up or down. I'm very proud of my income in 2021. And in this case here, I actually put the name in here. This is Joe Toothman who put this in here. Joe, I just want you to know personally, I'm very proud that you've learned from what you did and you've decided to drill down into very specific stocks, very specific strategies. And now you're just beating those up and seeing consistency. So, Joe, I'm very proud of you on that one. All right, following the profit maximizer and holding some winners for larger profits. Again, we talk about that quite a bit, holding the winners. Through the boot camp, learning to calculate risk and profit targets. Again, professional traders starting out, what did work, learning to calculate risk. I've learned to stay out of big trouble by recognizing what stage the smart money is in. So how many times have we talked about that today? When you learn to stay away from situations that are challenging or less than obvious, you immediately keep that money in your pocket. Then you go to the other side and you learn how to manage the winners, which is what this person put in there. All right. Using a lot of setups that I've learned here. 1, 2, 3, top and bottom, volume, volume, volume. I never learned before, but I've learned to be more choosy with my picks, which in turn less mistakes. So you're starting to see a theme here of what people are saying is leading to success. What's interesting is the list of what didn't work is gigantic. The list of what does work gets smaller and smaller when you eliminate what doesn't work. So even this person here is more choosy with my picks, which turned into less mistakes. To me, I'm getting goosebumps because the more simple and obvious, the easier it is to follow. And when it's easier and simple to follow, you have conviction, which means now you have a lot more confidence that when you take risk, that you have a good chance that you're going to be in control of that outcome. Okay. All right. Portfolio management. Try and keep 80% liquid rather than pick long-term options. I started looking at order flow and tape reading after subscribing to YouTube. All right. That's awesome. And listening to you spot the right entry and exit. All right. My best trades have been with U.S. stocks. Have been when I buy and hold a good U.S. company. A few trades went well, but I might have just been lucky. I wish I had a bigger list, but stock trading so far has not been that successful for me. So here's what I want to say to this person. Okay. Focus here. Okay. Started looking at order flow. Pay attention to that. But here's the big thing. I'd rather pick long-term options 1 to 2 months. So what should be working for this person is finding trades that match that 1 to 2 month time frame. So this person's objective will dictate the strategy. So I'm kind of giving them a little bit of a mentoring lesson here. If you know you're looking for trades that last 1 to 2 months, that means now you need to personally develop a strategy for trades that last 1 to 2 months. Okay, let's go over to the next one. First, entry. I have the discipline to follow my process. Again, what did work, and take entries based on the profit to stop and consistently make sure trades have the appropriate risk reward. That's awesome. Everything this person just wrote is in their control. Using options math to determine probability. Again, you see what's working? Probability, not what is definitely going to happen, probability. Exits. Once I establish, I consistently take my exits, whether, again, probability and consistency. That's not magic. That's in your control. Once I establish consistently, I take my exits, whether gain, stop, or losses. That's eliminating big losses. Again, what did work? Eliminating big losses. All right. I'm proud of consistently joining you for New Stocks for Breakfast. It did help me. I'm developing a strategy. I'm progressing one step at a time. Andrew, this is the biggest thing I want to get across here. It doesn't have to be giant leaps. One thing at a time that you eliminate, one thing at a time that you recognize works. That's where the success is going to come from. But this is really the biggest thing. And I want to end up on this one right here. Not giving up because of setbacks or mistakes I've been making. I've made some small gains. We've gotten a little better with the Finviz app and parameters. So this is for Kenneth R., but this is more for everybody. Kenneth wrote this in here, right? How approach if this happens, then I plan to do that. this is what I want to leave everybody with, especially because today is December 31st and it's New Year's Eve. First, I want to wish everybody an amazing and safe New Year's Eve. I want to thank you for being with me here on Stocks for Breakfast. We have a really amazing community here on social media and YouTube, and especially in our bootcamp community. I'd love to see everybody on these calls in the bootcamp. I want to let everybody know who's in the bootcamp with me. I'm just so grateful that you've decided to join me because I promise to keep working hard for you. All I need you to do is participate. So I want to leave on this because the very last thing we're talking about here is not giving up. Giving up is a choice, but I want to tell you why most people give up. Most people give up because they think that adversity is permanent and they feel like they're the only person who's going through a difficult time, and they're feeling like they're the only person who is not achieving what you want to go after. I got news for you. Everybody, including me, has adversity. Everybody, including me, has losing trades. Everybody, including me, has moments in time where they doubt whether or not it's going to happen for them. This person could not have worded it better. And I'm so proud of you, Kenneth, not giving up. Not giving up is probably the number one decision that you could make from right this moment going forward. But, and I want to make this very clear, you need to learn from the actions you take. If you choose to not give up, but you keep making the same mistakes over and over again and not paying attention to what works and what doesn't work, you're going to be in the same spot 12 months from now. So let's make each other a promise. Don't give up, continue pushing, and learn from every action you take. Eliminate what doesn't work, which means you have to write it out and pay attention to what does work and what doesn't work. Eliminate those steps that you admit are absolutely positively not getting you the results you want, and do more, narrow that list down of what does work, and then take flawless action. All right. I have to head out, everybody. Have an awesome, awesome year. Thank you so much for joining me here on Stocks for Breakfast and our YouTube channel. And of course, thank everybody who's in the bootcamp with us. If you want to learn about the bootcamp, click down in the description. I just want to say hello to my buddy, John Bates. I miss you, pal. I hope that you are awesome, and I will speak to you soon. Have a great day, everybody. I'll speak to you soon.